Lata Venkatesh has also had a busy day and she's joining in with her take on the entire policy. Lata, what do you take away from Rajan's last monetary policy?
Well, the accent has long since shifted from rates to liquidity, and there was one big liquidity headline today. That is the governor and the Reserve Bank are going to keep liquidity adequate. That means banks will be able to give money to the Reserve Bank at its daily repo window and will not be dependent on the Reserve Bank to take that money. The interbank system has been structurally deficit on liquidity by about 1 lakh crore. And plus every year as the country grows, more liquidity will have to be added. People take out cash and therefore further deficit is created. So the Reserve Bank, the governor clearly said that he thinks about 40% of the liquidity they have replaced by purchasing 20,000 crore bonds every month. So 80,000 crore has been purchased. If that is 40%, then he has already mentioned, he has given it away that he will at least purchase 1,20,000 crore of bonds from the market, and he will front load those purchases. That was very clear. So he will definitely not skip any month in terms of bond purchases. That was music to the ears of the bond market. I mean, basically, this big man with so much money is going to buy 20,000 crore of bonds. There will be perennial demand for bonds, so bond prices will not fall. That also was dovetailed by announcement that they are going to announce a major set of reforms for corporate bond market on August 25th. It is expected on that day that the Reserve Bank will allow the purchase of corporate bonds in its LAF window. At the moment, when the Reserve Bank gives money, as collateral, they take only Government of India bonds. They may take a little bit of corporate bonds. If that demand comes, then the demand for corporate bonds genuinely goes up. The cost of holding them goes down. That will be big reform. So that really is the headline. That liquidity will be provided in the interbank system, and on August 25th, something big is coming for corporate bond. We don't know what. We assume that corporate bonds will be accepted in the LAF window. So that's the headline. The non-headline is on interest rates, as you said, not changing, not giving any rate cut, and also not changing the fact that although inflation will touch 5%, there is an upward risk to it. If it was Rajan who was going to continue for the next 2 years, the market would have thought, oh, does this mean that he's not going to give any cut at all? But as of now, people believe since there could be another governor, there could be more space to cut later on in the year. So that statement is not really harming the system much at this point in time. The third key takeaway is that direct hit on banks, telling them that he would like more transmission, but it's only tough talk. He's not actualizing anything. The MCLR calculation, marginal cost lending rate calculation, is going to be tweaked. That may force banks to, pass on the rate cuts, but that we will have to see what exactly that tweaking is. It was only a finger-shaking, angry statement at the banks that he's not very happy not enough transmission is done, but he left it at that.
Well, that would have been a sight, a finger-shaking Raghuram Rajan. Lata, thanks very much for joining us. And the man at Mint Street is definitely going to leave behind a strong legacy when he walks out of the central bank in September. Here's just how he was rated by some of the biggest voices from the world of markets and, of course, top bankers in the country, joining us right here on CNBC TV 18.
I'm a trader, and instead of ranking, I will value him in billions of dollars, which he has brought from FIIs into India. He opened up India's debt market to FIIs, and that has brought billions of dollars. And to get this without being part of emerging market bond indices is an achievement. And the kind of communication which Dr. Rajan did with the foreign investors, I think that was incredible. And the value of the person is in the billions of dollars he brought for India.
I think one of the lessons he leaves behind is that you need to be fact-based. You need to have a dialogue around this, which recognizes the political criticality of inflation as a target, and in a way concedes that to the executive. And yet at the same time, he did, I think, strike a remarkable jugalbandi in that sense with the Ministry of Finance that I think people underestimate how much support there has been for this agenda. So the rigor, the accountability, and raising the quality of understanding around how you conduct monetary policy, and in that context, positioning inflation targeting at the center of it, I think is where he has taken us forward, and it will be a lasting legacy for us.
Clearly his portion of the job, much more than what I think one would have hoped for. In any kind of a reform, he's got a role to play, and so does the government. I think he's done an ample amount of his role. by clearly giving a message that inflation targeting is critical. He's leaving enough room for growth, which is not necessarily driven just by easy rates, but he wants to see investment spending pick up. I think he said that repeatedly. I think he's trying to create capacity for credit by pushing the banks to lighten up on the NPA. So I think if you look at the banking sector reforms, I think he's played, a solid more than 65-70% of his role here.
Well, I think whether he's there or not, I think the system is in place which will ensure, and even now government has also ratified that. So I think there is a system in place which will ensure that inflation stays within that bound, and I think the central bank will be solely focusing on that now.
The last 30 years, the savers of India, the largest group of people in this country, have been impoverished by high inflation, and they have not got a consistent real rate of return on bank deposits. They have been devastated, and money has transferred to a set of cronies who borrow more money and do the NPA problem. I think he said it right. To that, we owe a sense of gratitude to Dr. Rajan for creating the framework. So I would say 9 out of 10, and I think he's right at the top.
In fact, the ripple effect was felt across the board. RBI Governor Rajan's announcement of more open market debt purchases re-energized the bond